Hi, today we are going to quickly share the different taxes that a company needs to pay in Singapore. Before we go on, consider subscribing to our channel for more future content and hit the bell icon for notification when new videos are uploaded. In Singapore, the taxes a company is liable to pay can be broken down into 5 types. Here's an overview of the 5 types of taxes that you should be aware of when setting up a company in Singapore. Number 1. Corporate income tax. Corporate income tax is the income tax payable on the profits earned by a company. Corporate income tax rate in Singapore is fixed at a flat rate of 17%. However, there are many tax incentives and partial exemptions available to qualifying companies. Number 2. Goods and Services Tax or GST. A company that has revenue of 1 million Sing dollars or above for the preceding year must apply to be GST registered. As a GST registered company, it is then compulsory to charge output tax on the goods and services supplied. GST is 7% standard rated. For exports and prescribed international services, these are 0% rated. For its purchases, the company may be able to claim on GST paid to suppliers. While the GST is fixed at 7% currently, it has been announced by the government that there is plan to revise the GST to 9% in the future. Number 3. Stamp duty. Stamp duty is due when there is a transfer of unlisted shares or real property to a company. For purchase of unlisted shares, the stamp duty payable is 0.2% of the consideration or valuation, whichever is higher. For the purchase of real property, the stamp duty payable is 1% on the first 180,000, 2% on the next 180,000, and 3% on the balance thereafter. For the purchase of residential property valued more than 1 million Sing dollars, 4% is levied on the amount in excess of $1 million. Do note that companies buying residential properties are also required to pay an additional Buyer's Stamp Duty or ABSD of 25% on the value of the property. There is also Seller's Stamp Duty payable for residential properties if the company sells within a stipulated time frame. Number 4. Property tax. For the duration of owning the property, the company is obliged to pay yearly property tax. For non-residential properties, the property tax is a flat rate of 10% levied on the annual value of the property. For residential properties owned, it is a progress rate of 10% to 20% levied on the annual value. Number 5. Personal income tax. Personal income tax is levied on the income of individuals. A company only has to take note of this if it is bearing the tax on behalf of its employees. Personal income tax for a tax resident in Singapore ranges from 2% to 22% with the first 20,000 Sing dollars exempted. If you require assistance with accounting and taxable matters for your company, talk to us today. We have a team of qualified accountants ready to assist you. And if you find our content useful and would like us to touch on similar topics, let us know in the comment section below. I will see you in the next video.